So just to start, how would you characterize the current state of the private student loan market in the US?
Yeah, I think the private student loan market in the United States is about to face the most significant disruption in its history. You've got roughly $1.6 trillion of federally guaranteed student loans or federally owned student loans. And the Department of Education just last night and this morning announced they're about to start massive collection efforts on those student loans. And with that, that'll put significant downstream pressure on those private student loans. And I think you're going to see a significant uptick over the next 6 months in defaults across all consumer products. So that's credit cards, auto loans, and in particular student loans and private student loans. So yeah, I mean, I think it's going to create a unique opportunity for alt lending in terms of a window of time over the next 18 to 36 months, where you're going to see 10 million plus student loan borrowers at the federal level having pressure on all their other consumer products.
As a percentage, Mark, and we won't hold you to it, 10 million, how many federal student loan borrowers are there in the US?
Yeah, there are roughly 44 million student loan borrowers. I think 10 million is actually a conservative estimate. The Department of Ed has said they anticipate somewhere between 25 and 40% of borrowers be at some level of distress. Obviously, at the 25% level, that's a little over 10 million borrowers. And most people don't realize as they look at their investment products that the second largest consumer credit product in the United States isn't credit cards, isn't auto loans, it's actually student loans. So it's a ubiquitous product here in the U.S. And since the beginning of COVID, there have been no significant collection efforts on those federal loans. So there's been less pressure on the private credit product.
So why do you think Trump is now has now taken changed stance from the Biden administration? Of course, the forgiveness programs very current in his sort of political agenda. Why is Trump now really focusing on those recollections, and how does that differ from? So when we're looking at federal student loans, we're looking at the collateral for that is the US taxpayer, right, on these federal student loans. On the private student loans, that's based on the underwriting of that particular borrower, as well as contract law. So you're not looking at something that can be easily affected by federal policies. Is that correct?
Yeah, this is a separate and apart from the federal loan products. But I will say this, the Department of Education in their collection efforts will be putting pressure on borrowers. So if you were expecting a tax refund, if all of a sudden you're facing an administrative wage garnishment to pay your federal loans, that's less money in your pocket as a consumer to pay your private student loans. And I think you hit the nail on the head. The federal government has a set of tools that's expansive in terms of collections. And the beginning of collecting on $1.6 trillion will have a significant impact on and an uptick in other consumer products, including private student loans, in terms of delayed payments and defaults. You had asked at the beginning why the Trump administration is making so many changes. The Biden administration had gone from trying to forgive $700 billion in federal student loans to a position where they were requesting payment, but not impacting people's credit scores or doing any of the other collection efforts that would be needed to get borrowers back into the right repayment status. I think the Trump administration realizes that there's a significant impact to the federal coffers in trying to collect on this debt.
So the federal government, of course, they've got a few tools in their arsenal to impose those collections on borrowers. From the alt lending side, what sort of tools do you have to enforce collections?
We have our biggest tools are more proactive than reactive, which is to say, with alt lending, you're negotiating a lower payment, a lower monthly cost. You're working with borrowers as their partner, as opposed to threatening them with litigation and other types of what you'd call negative collection efforts. With alt, you can get somebody back into a repayment status over the course of 1, 2, 3 months, and then a year down the road, their credit score has gone up significantly. If you end up in a standard collection effort and end up in a litigation, that's a 6 or 7 year hit on your credit score. And at the end of the day, and you're being sued. It's a significant burden. So we take a burden and turn it into something that becomes a positive.
So with the private student loans, a lot of them are asking with the additional collections that Trump will seek, whether through the Department of Education, IRS, or to be the Treasury, that this, of course, has a downstream impact. But that doesn't necessarily mean that they may be creating more distressed, delinquent, and defaulted private student loan borrowers. But your entire model is to refinance those or restructure them in favor of the borrower, therefore providing additional demand as well as a product that can enable borrowers who were probably previously paying 15-20% interest rate on their loans to have a manageable repayment schedule. Is that correct, or have I missed anything there?
Yeah, that's the number one benefit we provide our borrowers, which is we're going to buy that asset at a discount and repackage it for a borrower that will allow us to lower their interest rate, lower their monthly cost. And again, I think that business is going to see a significant uptick over the next 6, 9, 12 months for sure.
So last question on the changes to student loans from the federal side.
Yep.
Down the line, you're saying there could be anywhere from 25 to 40% default rate among sort of 11 million, maybe more student loan borrowers. In that case, where do you think the federal government, of course, we won't hold this to you, where do you think the federal government will go with this defaulted federal paper?
Oh, I mean, I think, prior administrations had as many as 10 collection companies or more working to collect on those assets. And none of that paper has been worked over the course of the last 5 years. So that's where I think you're going to see a significant increase in efforts.
And now the big word on this side of the Atlantic, Mark, is tariffs. And we've seen the changes or the significant declines in the S&P, the bounce back, the shifts from different tariff rates to the various countries. The UK getting 10%, and we've seen the more recent sort of trade war, I think it's being termed, with China. Are we up to more than 125% now? I must check my bingo card. But what's the impact of tariffs on what is a consumer credit market in the US?
Yeah, that's a great question. So the direct impact from tariffs means cars become more expensive, other items, phones potentially become more expensive. Everything else in a U.S. consumer's life is supposed to become more expensive. Not just guacamole coming from Mexico, but certainly more substantial products, building products, home construction, all those things. As the cost of goods goes up and inflation potentially has an impact, you could see, as you've seen in other previous credit cycles, significant uptick in defaults across credit cards, autos, student loans, mortgages, and that should be it's a real concern from an economic standpoint, but it's a significant benefit from an alt lending standpoint.
So with that, I think one of the biggest issues that we see when we're speaking to investors is that the thought that the US economy is about to go potentially off a cliff. There may be political motivations to that. What's the general thoughts on US going into recession? Of course, that again impacts consumer credit markets as well. Or is the impact, or how do you view tariffs as a whole? Is it a negotiation sort of tactic with these countries? Where do you see it going?
Yeah, I mean, the president has long believed that America isn't getting a fair deal in global trade, and that in order to get a better deal, the tariffs need to go up on this side of the world in order to have fairer trade And with that, there's potentially some short-term consumer cost, but it seems like President Trump is prepared to withstand that for what he believes is the long-term gain.
And I think we've spoken a lot about um, the borrower side and the supply side perhaps, and how those repayments are managed. What about on the secondary market? So of course, often old entities looking to either refinance the portfolios once they become seasoned, or to sell them off back onto the secondary market, of course, at an increased price. So anywhere from 5 to 50 cents on the purchase price side to the 70, 90 cents on the resale value. Do you have any concerns or any insight onto how the secondary market is playing out at the moment in response to recent events?
Yeah, I mean, you're still continue to see a strong pipeline of asset-backed securities, particularly student loan-backed securities, from some of the more significant players. I think Sallie Mae just priced a piece last month quite attractively, and at the end of the day, flight to quality will benefit performance, and I think the performance speaks for itself in terms of history defaults, portfolio with a attractive overall interest rate, currently in repayment, in terms of no in-school deferments or forbearances, in terms of the credit quality. So I think that continue to be a benefit for all. Yeah, for sure.
And then just final question, Mark, appreciate your time today, is what is the role of private capital playing now versus perhaps 5 years ago in funding and acquiring private distressed education loans?
Yeah, I think that coming out of COVID, we've seen more opportunity than during the COVID period, because borrowers are in active repayment across their student loan products. We saw a pause across the board on some of those efforts, not just collections, but actually just repayment efforts. And so we're still breaking through the cobwebs of that in a way that will provide an attractive opportunity for those looking at alt, for sure.
Fantastic, Mark. Well, appreciate your time. Is there any final comments or anything before we close off?
Yeah, I just, as investors look at their portfolio of U.S. debt instruments, I think we provide an attractive entry point that's differentiated maybe from some of the other historical products they've looked at. So we're excited to do that. We're looking forward to seeing what the Department of Ed does in terms of collections and how that's going to impact the $130 billion private student loan market.
Yeah, and of course you're very close to where it happens and always updated. So we look forward to further insights in the future. So thank you, Mark.
Thanks, Ben. Really appreciate you.